Hey guys, welcome back to another week of fundamental analysis. We did take an L this week on US 30. 1 week after Trump's election, markets have been sort of a bit crazy, especially Bitcoin and all the stocks and whatnot. So let's delve into it. I'll show you my trade first, and then we'll go through our fundamental analysis, do some insights, do some predictions in terms of biases, and show you what I think I'm going to be trading coming. So let's just go through my Forex journal first. Okay, so we've got US 30. This is week number 3. Trade was taken on a Wednesday on the 13th of this month. We did half the risk, so P&L wise, we lost $143. And let's actually have a look at the trade. So we knew that what we saw was a big pump after Trump's election. We obviously got down to a 4-hour zone, had a little slight pullback into this area here of liquidity, and we got taken out. So half the risk, not a great zone to trade off the daily. So what I'm going to look for is to reach this previous higher high. And if I see a nice candle, we will get into a long position and we will put a full 1% here and a full 1% here and here. So these are better pullback areas. If we were to take a fib retracement from the daily chart, we can see this is a 50%, this is 75%. So better areas to actually trade compared to that one. Fundamentally, again, we'll go through the fundamental analysis and show you guys the rationale for why we're still bullish on US 30. So that was one loss. We are down 0.75 on the week, and we are sort of, our risk is going to be dynamic now. So everything will be dynamic. If I have strong zones like this one or this one, it'd be at the full 1%, and backing with fundamental analysis, obviously. If I have weaker zones like this that I just want to be in a position and see if it might go, then we'll 0.5% or even 0.25% of the account. So let's actually go through the fundamental analysis for the week. This is the 11th of November to the 17th of November. And again, guys, this is not financial advice. Yeah, it should be a no-brainer. I'm not even too profitable yet. So yeah, take it as my journey, my backlogs. Don't take it as financial advice, obviously. COT reporting, 12th of November, we had quite a big amount of volume being injected in the market. Again, this was post the election. We have, bang, look at that. Look at Bitcoin, 18% up, 19% in US 30. Just a lot of volume being injected into the market. We have S&P 500, 7% -3 on US 30, -3 on the yen, 4% on the pound. In terms of what we're trading, US 30, we did have a slight change in US 30, -1, but nothing too crazy, and gold was a -1 as well. So the only thing I'm going to sort of take out from COT is the amount of volume that's come in, the amount of liquidity that's sort of in the markets now after Trump has been elected, which gives us opportunity to trade essentially. So yeah, if I do have a bias fundamentally based off economic news, I will be trading it. If it is fundamentally and technically backed up, I will be quite aggressive on my entries and position size. US data, we had CPI, PPI, and core retail sales. So CPI and PPI were more than less forecasted the same. When we go through the graphs for both of them, you guys will see that inflation is still, I wouldn't say elevated, but just still reducing with the rate it's like sort of intended, essentially, is what I've gathered at least. So I think in terms of rate cuts, it will be dependent more so on the economic news that is coming out regarding employment, and yeah, employment is the main one, jobs, and less so much on this these figures unless they really drastically change. So no real crazy readings on this. Core retail sales. So this was an interesting one because we had lower than expected on core retail sales, and we'll go through the graph as well regarding that. But we had a really big revision two times from last month, from 0.5% to 1%. So still showing quite, good not sentiment, but good economic activity, good confidence. People are still spending on the core things. So it's quite good for the US economy. I think if we had good economic activity, good employment ratings, then really rate cuts should be slowed. We shouldn't get the 0.5% or basis points, 50 basis points cut. We should start cutting slowly now. But again, let's wait for employment data because that's super important. And yeah, just keeping in context how much spending people are really doing. Now for Aussie, we had big news from Aussie as well. We had wage price index, consumer confidence, employment change. So quite negative readings you guys can see from this week to the next. It's turned more red. Essentially, that's sort of the main gauge I will use. Wage price index was exactly the same as last month, weaker than expected. Confidence was actually very high, highest it's been. So we'll delve into that. And then employment change was, worse than expected or same as expected. So with the Aussie right now, because I live in Sydney, I sort of know what's going on the most for the Aussie. And I can just say we haven't got a rate cut yet. It's still elevated, but at least myself, I'm managing. I know there's a lot more houses on sales still, and a lot more houses are remaining on the market. So there is that financial pressure for people to sell off. People aren't buying houses, quite stagnated. I don't know if it's to the point where we need a rate cut right now. At least, again, I'm doing fine. But yeah, we just got to keep that in mind. If we do get a rate cut coming shortly next year, is what they're estimating, then Aussie would be weaker, depending on the market we compare it to. So right now, because Aussie is quite weak, because US is quite strong, we could potentially take AU long. Short. We could potentially short AU, but from a technical point of view, I'm not confident in doing that. So we're going to stay on the sideline. We'll go through the graph later. So this week's data, we had, again, Aussie wage price index and Westpac consumer confidence. Wage growth is the slowest pace of the year. Westpac was the highest confidence reading since Jan 2023. In my opinion, what I got out of this was we still got high confidence. People are still spending, and although the wage growth is the slowest pace in this year, it was quite the growth was quite substantial in the previous month. So I sort of boiled it down and said, hey, look, it's not slow enough to actually entertain rate cuts. And again, in terms of, I think, RBA Bullock and people like that, they were thinking that rate cuts will be coming later through next year. So yeah, nothing really too much to say with Aussie right now. USD, we did speak about CPI and PPI, both measures as expected. We'll go through the graphs and speak about that. Aussie employment and unemployment worse than expected. However, unemployment does look like it's reaching the peak on the graph. So let's go through, have a look at Aussie graphs, employment and unemployment. We'll change this to, let's go the year. Changes to the year. So we see employment, we want it higher. We can see employment was steadily coming up. We did get a drop this year. It is coming to the end of the year, so that might affect employment. So you can see even with the heavy interest rates, it was still climbing up. So big drop this month, but we'll see after the revision and after December and the next New Year's where this sort of figure is going to be at. The thing I wanted to point out more so importantly is unemployment seems to be capping off at at this rate. So 4.2%, it has come down to 4.1%. It'll be very interesting to see if that is the peak of it and with the current interest rates. Because if it is, then again, interest rates might be a bit slower than expected. We might not cut as aggressive as it anticipated. Going back on the slides. USD Powell. So this is a direct quote. The economy has made significant progress towards our dual mandate goals of maximizing employment and stabilizing prices. Labor market remains in solid condition. Inflation has eased substantially from its peak. So basically what Powell is trying to bring to light is that the rate cuts that they've done have been successful. They're at this sort of equilibrium right now, and that further rate cuts in terms of an aggressive one might not probably be on the line. I know Trader Nick, I just watched his video. He did say he did think that overall this week was hawkish, and I agree. I think in terms of the rate cuts, they're not going to be as aggressive, at least from that little piece of quote that Powell said. And it's quite a neutral stance is what I put in that opinion. It's a neutral stance. It seems the economy is doing well. We're not going to get as aggressive of moves, but we're still continuing with at least what I see from a technical point of view is a thriving US market right now, a risk-on market, essentially. Last one, retail sales. If you guys look at core retail sales, 0.1 compared to 0.3 forecasted, which initially we might say is a bad reading, but you look at the bigger picture, retail sales is up. Retail sales is revised up as well from last month, and the biggest thing is core retail sales was revised up from 0.5% to 1%, so double, which is a very big revision. It's still showing that consumption growth is still going strong, essentially. So yeah, overall, very bullish for US 30. USA. Very bullish for US markets, risk on, and that's what we're going to trade, essentially. So let's go through here. Inflation data, you guys can see that, look, CPI was coming down but as we cut rates, it might start getting a little bit sticky here, potentially. We'll have to wait for the other readings, but you guys can see that a little bump in the road right now. PPI, same deal, a little bit more elevated compared to trajectory coming down, and just a little bump this month. It'll be very interesting to see what it gets revised to. If it gets revised down, or if it remains the same, it might actually be a good sign that inflation is still slowing down but still coming down, and that we can start seeing more rate cuts, stimulate the economy, and again push that agenda that we have a strong bias to trade these indices that we're speaking about. Anything else? No. So next week we have RBA Bullock speaking. We have I want to see this Philly Fed manufacturing and the revised consumer sentiment for University of Michigan. The reason why I want to see Philly Fed is that we know from the past readings, manufacturing has been the main issue. Services has been doing good. Manufacturing has been the main sort of lagging market in the US economy. So if we have good signs for manufacturing, it's actually a really good sign for, again, pushing the agenda of the economy is doing good. Let's get risk on, essentially. So bias is basically gold on a little pullback currently from a technical point of view, and currently with fundamentals supporting better US economy, more risk on, and I'm actually happy to trade gold on the short side. It looks good fundamentally, it looks good technically as well. So we're going to keep with that sentiment. US 30, we've got post-election, strong consumer sentiment, inflation somewhat controlled, long. So still with the sentiment. AU, too choppy. We do have a bias on AU. Currently, Aussie is weaker, US is stronger, but it's from a technical point of view, it doesn't look good. So I'm going to stay on the sidelines. We have two other markets that are thriving and doing better. So let's go on to the charts. You guys can see a big pump on the dollar index. You guys can see though here is we do have quite an area of resistance potentially, right? So this is on the weekly, guys, mind you. So yeah, very, very high time frame. We just want to keep that in mind. It is reaching an area of sort of resistance. So potentially a pullback here to pump up, but we'll keep in mind that the dollar is quite bullish right now, and we'll go with the trend. This is what I'm talking about in terms of gold. So gold, if we go on the weekly, zoom it up a bit, you guys can see this whole year. If we start from this year, look how much it's pumped up, 40% on gold. So big rejection wick here. I think they call it a morning star candle from what I remember in the past. We had broken previous daily support here. We have found some support here on a little area. We have major, I'll pop it actually here, major liquidity down here, major liquidity down here as well. Right, so what I'm going to try and see if we can suss out is if we go on the 4 hour, I like this area here with the liquidity, 4 hour liquidity there, previous lower low. What I want to see, guys, is I want to see price touch this point here. I'll probably pop my stop right there and see if we can trade gold to the downside, right? If we get a nice entry here, potentially pop our stop here, you guys can see if once we can get into these certain 4 hour areas, we've got a 1 hour there, 3 hour there, just some really good risk to reward. So happy to trade gold if we see some rejection in this area. If not, we've also got another sort of high area here that we can trade, previous lower low. So that's gold, US 30. Let's do it. Same deal, top down analysis. You can see US 30 this year as well has been on a bloody tear. 17% up from US 30, and really look at that big candle here, 6% in the last week. So we're definitely on a bull run right now. Good breaker structure here, good higher, lower high here. We did take this again, like I said, we did take this minor little 4 hour liquidity zone, which with half the risk, if we do get back here, right, and we see a nice candle, let's say here, we will be going quite aggressive we'll go a full 1% here, we'll trail like so. If we get down here, which if we go back on a daily, you guys can see is a nice-ish area, right, of liquidity, right, especially after getting a 4 hour rejection wick here and here and here. We could look to get long here, pop a wide stop. You guys can see I got quite a good risk to reward, and probably the best area to get in though would be down here. Obviously, the lower the better. And you guys will see if we do get back here, quite nice risk to reward. So ideally, look, obviously we wouldn't want losses, but ideally we'd want this and just to keep trailing, pumping up. And then if we do get pullbacks into, let's say this goes here, comes up here, if we get a pullback here, we can go 0.5% and just really ride the trend, if it is trending, that is. So yeah, and they'll make up that loss back and some. So that's the idea for US 30. And then Aussie, you guys will see Aussie right now is just, it's pumping down. We've got this big rejection wick on a weekly. Yeah, look at that. It's just not nice. It's not a nice, although this is, don't get me wrong, this is a clear downtrend. I just don't feel confident in trading that. So let's stay on the sidelines for that. Yeah, that should be it for the week, guys. Speak to you next week. Hey guys, welcome back to another week of fundamental trading analysis. This week was pretty good, overall pretty good. I think I did take one bad trade that I'm not too proud of, but yeah, let's just run through the trades I've taken this week, and then we'll also go through a trade I'm actually in this week. So you guys can see, look, October minus 4R, November not doing too good as well. We've got minus 2.75R right now because we did half this lot size, we did quarter this lot size as well. But let's go through the two losses I took this week. Another thing I added, guys, was I am going to start ranking my trades. What is, what's a B trade, A trade, C trade, whatever it might be, A plus. So might just go through the two trades I've taken so far, and let's sort of rank it together. So the first trade was gold. Now gold, you guys, if you guys have been following my channel, you guys know that gold has been on a crazy tear. Let's just go on the daily. So you can see where's the start of the year? Around here, gold has gone up to its peak 38% the whole year, pretty much on a bull tear the whole year. We had some really big sell-offs in the last 3 weeks with Trump being elected, with lower interest rates. It's just although lower interest rates is better for gold spot, we also have to understand that lower interest rates usually mean trying to stimulate the economy, meaning more a risk-on approach, essentially. So my thesis was, hey, look, we got a risk-on approach. We have things like the dollar bullish. We have things like the indexes being bullish. I'm going to try short gold. Now, the reason why I didn't like this trade per se is, although we did have a breaker structure here, technically a breaker structure to the downside, we would have had from here to here, it would have been a nice 50% retracement. If you go on the 4-hour time frame, I literally entered off a doji. No signs of rejection at all, no signs of momentum. So in terms of, if we go on the link, you guys can see taken at this zone here, which was a valid zone, but no real candle to give me that confirmation. So I'm going to rank this trade a C trade. The only confluence I had was pretty much, I would say like a 4-hour resistance. We had, let's see what else we had. 4-hour resistance. We had, let's just say, a risk on environment, lower interest rates plus Trump's election, tariffs, lower taxes. So from a technical point of view, the only thing we had was this 4-hour zone here. We had no rejection wick, and from a fundamental point of view, we have the lower interest rates, with meaning a more risk-on environment. Trump having pro-manufacturing, sort of like a what's the word I'm trying to get at? The administration right now, Trump's administration, is more, pro-manufacturing, pro-USA essentially. So you'd think that would increase the risk-on environment in terms of things like US 30, S&P 500, or the US-based companies essentially. So comment I wrote here was horrible trade, no signs of rejection on the 4-hour, and also going against the major bull trend that I'm trying to time the top essentially. We did have, look, you guys can see that's a nice head and shoulders pump down, retouched that, baseline, went back down, but it's just, there would have been better setups apart from gold. So you know what, guys, that's a horrible trade, probably the worst trade of the year, to be really, really honest with you guys. The previous trades, the previous loss streaks we had included things like oil, which really we had no, it just doesn't work with our strategy right now in that environment. It's not a trending environment right now for oil. So, you know, I could give myself the benefit of the doubt for oil. These other trades here were okay, somewhat decent, but this was just horrible. So that's a very horrible trade. Next trade I took was US 30, and that was on the same day. This was a very good trade. I'm actually very happy with it. The only comment I might say is that entry criteria wasn't the greatest, but you guys can see we have a resistance turn support here. We had some kerfuffling here, so, you know, not crazy rejection wicks per se, but you guys can see there was elements of, you know, stagnation. We have a doji here, undecisiveness. We have, you know, rejection wick here, a bit of a rejection wick here. So you guys, and then just price confoffulating, that would have been around a day's worth of just choppiness on the 4 hour. So decided to get in there, stop loss under this, got taken out. But in saying that, I still like the zone. So we let the day end. We had a big rejection wick on the daily here. We decided to get on the 4 hour here. Stop loss under here. You guys can see we have reached this next resistance zone here. So we'll let it play out. What I hope to do is probably move my stop. I will do this after this video, but you guys can see it has pumped out from this zone, reached this resistance. So I'm going to probably move my stop somewhere here. Let's just mark it up. Move stops here. Right. So if I can move my stops here, I'm pretty much just risking, yeah, around like 10%, 20% of my overall trade. I've put 1% on this one. So if I can get that going, what I'm hoping to see is some liquidity building here, maybe come back down here, shoot up, come back up, and hopefully we can get it in on a nice trade. This will be the last trade for the year, guys. It's November. Coming into December, we'll still be looking at the markets. We'll still be doing this every week, but I just want to slow it down a bit. We had a great year this year, starting fundamental analysis and trading from June. You can see we were profitable for 4 straight months with some decent risk to reward, right? 2.25, 4.5, 1.75, 3.75, great risk to rewards. This month in general wasn't the best in the sense that really oil, we should have taken that out ages ago. You can see from June we got 1 oil loss, 2 oil loss, 3 oil loss, 4, 5 oil loss. So oil, we've 0% win rate in oil, 0%. So if we'd taken it off, we would have got so much better results. But nevertheless, we take oil off. These 2 trades here, I think from my recollection, I think they were decent trades. So I'm not too fussed on that. But this gold one here was probably the biggest one that I was pissed off about. This one is actually an A setup here. This one is an A plus setup here. A plus. I'll write the confluence later in my own time, but yeah, I'm very happy with how I'm wrapping up the year. I think if we can get this trade here, if this trade we can start to manage, and hopefully, you know, again, this would just be the market doing its thing, but hopefully we do get a pump up. We can move at least to a 1-to-1, and then start trailing it, and hopefully keep our capital somewhat still there. Yeah, that's the aim of the game, essentially. I also just wanted to point out this week, guys, that I am going to really, so Q4 for this 2024 is pretty much done for me after this trade. Next year, 2025 Q1, I will be risking the same amount, so that is 200 USD per trade. If I can do that for the quarter and be profitable after Q1, going into Q2, we'll start to increase risk to around, I'd say 400 or 500 USD per trade. which is, if it's 400, yeah, we'll do 400 USD. If it's 400 USD, that is 1% of my account essentially, in terms of in my savings. So what I do is in my actual trading account, it's not the full 70K. The 70K is in my savings account. The trading account will have, X amount. So it might be 5K or 10K, and then we'll just keep risking that. Again, if I'm good for Q1, we'll increase risk to, let's keep it 400 USD. If that increases, if I'm profitable again for another quarter or 2 quarters, we'll increase that again further up. So hopefully with that method, I can get more data for testing, right, in live markets, but also build my confidence, my threshold. The aim of the game is to get 2R per month, which if we take out October, which, look, this is being selective, right? But if we take out October, really those 4 months we were on 2R on average, right? If we take out oil, right? If we take out oil, we're actually on, I did do some calculations in my book. Yep, if we did take out oil itself, we'd have a 41% win ratio with a average of 3.24R per trade, which is profitability, right? Again, if we take out oil, let's just see from a month-to-month standpoint what that would be. So that would be 3.25 on that month. This would be 5.5 on average. This one would be 2.75 on average. This one would be the same, 3.75. October would be -2. So if we do that, let's just, again, guys, this is just me speculating, but it's good to sort of see what the potential we could be on, right? 2.75 plus 3.75 minus 2 divided by 1, 2, 3, 4, 5, 5. Right. Profitability, right? That's above 2R per month. So if I can do that, it's just about scaling after that. So let's keep refining our strategy. Let's keep refining the mental. I think we are ending November pretty well, considering this last trade is, at least, if it is going to be a loss, it'll be a small loss, not a big deal, right? If it is going to be a win, we are literally at all-time highs. We literally have great fundamental backing. Low interest rates trumps pro-US economy sort of mandations and whatnot. So I'm looking for this to really pump up. Another thing I wanted to mention, guys, is I will be today delving a bit deeper into the presidential cycle. So it'll be very interesting to see how every 4 years what happens to the markets, what happens to things like the Dow Jones. But yeah, that's something I'll be looking into myself for this week. Alrighty, let's blast through the fundamentals for the 18th of November until the 24th of November. I do apologize if you guys are still watching. It's a bit of me rambling, but again, these videos are more for myself rather than, well, they're for you guys as well, because when I am profitable, all these videos you guys can go back, watch these videos, see how I'm talking to myself, and understand that, look, I came from nothing as well, and I made trading profitable, right? I became a profitable trader. So yeah, these videos is for me just as much as they are for you guys. Let's go. COT reporting this week. We had some interesting news. We have the UK or Great Britain and Euro really doing really bad this year, actually. Really bad PMI numbers, which you guys will see later. Yeah, it's just they're struggling right now. So the yen as well. We had this big sort of bullish impulse from the yen, and now they're back on the short side. had a bit of a bullish shift for this week. You guys can see I'm in a US 30 trade. It is there is a bias change of -4. S&P and NASDAQ +1 and +2. So using this COT data as I guess a confluence, that means, look, I'm in the trade. I'm trailing my stops and whatnot, but I'm not going to be taking any more trades on US 30 until this reading is a little bit better, a more bullish shift essentially. Oil, gold, silver, 1%, nothing too much to comment on. You can see big volumes taken out as well. I think people are starting to, just towards the end of the year, not trade as much. So it is what it is. US data for this week didn't change. And so as the Aussie didn't really change. So not too much to comment on. This week's economic data, we have Governor Ueda. Overall hawkish news, he described the Japanese economy as quote-unquote recovering, which is a good sort of statement to stay, especially with how poorly the economy has been in the past couple of years. He also states that he'll continue to raise policy rates, and they'll be dependent on economic data. So the yen was on, in terms of rates, was negative for quite a long time. They have just changed it to, I think, 0.15, if I'm not mistaken. It looks like they're going to keep continuing to hike rates, dependent on the economic data. US, the Philly Fed Manufacturing Index. So you guys can see Philly Fed, we were negative 5.5. And although this was a softer print this month, the survey's broad indicators suggest more widespread expectations growth for over the 6 months. So, and that's upon me reading into it and what the reporting is saying. That's not me trying to find reasons for why I think USD is bullish. That's just a little side note I wanted you guys to say. PMIs, we have comments from this Chris Williamson, who's the chief business economist. He says, business mood brightened for November, attributes this to, again, this is what I was talking about, that risk-on environment, lower interest rates, plus pro-business approach from incoming admin. Bracket greater protectionism plus tariffs. So greater protectionism, lower tax for the US citizens, and tariffs on international exporters like China will mean, at least with the US citizens themselves, it's better environment for themselves actually. So little nice comment there by Mr. Chris Williamson. And last one, we have the revised University of Michigan consumer sentiment, and although it was a softer print this November, it's still another month of positive sentiment. So what I mean by that, guys, is let's jump on, and this is when you guys know it's all legit, all live that I'm doing, because I'm just jumping on doing my thing. You guys can just watch it with me. So we go University of Michigan. You guys can see we had its lowest point in July, and you can see it's slowly climbing up. And although we were meant to get this reading here, unexpected, was lower, it's still high, it's still increasing. So I'm not even fussed. It's still a positive reading in my eyes. It's just not as big of a reading as what we thought it would be, or what the economists thought it would be. So overall, still bullish for USD, at least what I'm taking out of it. Again, I might be, there might be a bit of selection bias because I'm in a trade that wants a good economic reading for the US dollar, but it is what it is. No changes in any of my graphs that I'm following. Next week's data is actually pretty, so this week was pretty slow, pretty shit in terms of not really big news, but next week is going to be big news. We have consumer confidence. The biggest one I want to see is preliminary GDP, which is the second, it's the GDP reading in the middle, right? We have advanced, preliminary, and final. Prelim is still pretty big, considering now we have Trump in office. We want to have an understanding about how the GDP is, if it's still increasing, if it's stagnant. Let's just actually go and see what the couple readings were previously. So GDP, let's go a year's worth of data for our range. Let's go 2 years then. 2 years, we had GDP at its highest in November, came down, and then, mind you guys, we were cutting rates, so we're expecting, so reading wise they're expecting 2.8, which was the same as last month, but I'll be very happy if it was slightly higher, and I wouldn't be surprised as well, seeing as we're cutting rates around this time here, trying to stimulate the economy. So that'd be very interesting to see. GDP, we've got PCE as well, just to check on inflation. And we have, for Aussie that we're tracking, we have Governor Bullock speaking. So that'd be very interesting. My bias. All right, so I'm still with the sentiment in gold. I still think it's overall bearish right now if I had to pick a side, just for the simple fact that it is a risk-on environment. Risk-on meaning people would rather trade things like US 30 and whatnot. Gold less being less of an asset being that safer asset, so they'll be less traded. But again, I'm only going to short if it really is a strong technical signal, which it currently isn't. It's just we go on gold, it's just way too bullish right now. So unless I get a nice technical signal, somewhat like this one, but more so like an impulse down and a retracement and some rejection wick, I'll probably take that. But right now you guys can see gold's tearing again. I'm not even going to bother tracking that. Let's just take some of this shit off. Let's just put on, and if we're going to the short side only, let's just put these two here and see how it goes. So we're in this sort of range here on a daily at least. We want to see where price kind of goes from here. US 30, we said election plus strong consumer sentiment plus inflation somewhat controlled equals long, and also rate cuts. Obviously, I'm still with this sentiment. AU still choppy and still with that sentiment. So let's have a look and see what our graphs are actually showing us. You guys can see the US dollar is still pumping up, right? Which is crazy. We've got this area here of somewhat resistance, but you guys can see USD still pumping up. Pretty nice. Gold we were talking about is, we're not too sure, kind of choppy to be honest from a daily point of view. Not really too sure where it's going to go. It has a bullish run here, could come down and pump back up, but fundamentally I'm not happy with that. US 30 I'm fundamentally happy with. We've got a nice impulse after Trump's election. We've got this impulse coming back down, a nice rejection wick here into a legitimate support area, right? Previous high. Where is my brush? Previous high broke up to the upside, right? Broke up to the upside, came down, dipped down, rejected, pumped up. Classic textbook price action. We will trail our stops here. If we go on the 4 hour, we can see we will trail our stops under this rejection wick here, 4 hour rejection wick. We'll put it somewhere here, okay? Be around 20% risk there, 0.2% risk there. Had this pump up. This, ideally we'd want this area here to hold, right? If we were to put a 4 hour, we'd want this area here to hold, break up here and break up, move further, and then we can move our stop down here. And then if it breaks here, we can move it down here. So really nice trade. Again, this will be the last trade of the year. Happy with this trade. Let's jump on our AU. AU, you guys can see, is overall bearish. Australia, look, the economic reading for Australia has been pretty shit these past couple months. The only thing it has going on is it's keeping the interest rate still the same. That's the only reason why Aussie is somewhat strong. It has a nice zone here as well of support, but yeah, too choppy to trade. If it was like here, we could trade that. But you guys can see AU is just chopping like crazy right now. It's disgusting. Actually disgusting. So not really a fan of that. But you guys can see Aussie NZ. We have this resistance here. I'm just watching this, by the way, guys. I'm definitely not going to trade this, but this was a Aussie New Zealand or Aussie Kiwi actually trends quite nice. I do like the price action of it somewhat. Like, especially look at this period here in 2021. Like, there's so many opportunities to get in this area here and just trail, right? Here, trail, just some nice, really nice price action on AN. So we'll track it, and fundamentally it's a lot easier to track with Aussie and Kiwi, but we'll see how this goes. But yeah, guys, this will be the last week of trading essentially. We'll just be trailing stops on this one. I'll see you guys on the next one. See ya.